Tapestry continuing its court battle with the Federal Trade Commission, the holding company for brands including Kate Spade and Coach, trying to acquire Michael Kors' holding company, Capri, in a deal worth $8.5 billion. For more, we are bringing in Pauline Brown, LVMH former chairman and author of Aesthetic Intelligence, along with Yahoo Finance's very own Julie Hyman. Pauline, it is good to see you. So the FTC doesn't like this deal, Pauline. They don't like this merger. They say it's going to lead to higher prices. You agree with the U.S. government on that?
In this particular case, I don't. And I was surprised that they took action. I think the trickiest part of their legal argument is that there is a natural market, not for handbags, and not even for luxury handbags, but for what they're calling accessibly priced handbags, luxury handbags. And I mean, the reality is, I think it's a spectrum. And going to be, normally I would say once the FTC takes action, their probability of victory is pretty high. When I look at the facts here, I think this is a high hurdle.
As someone who is inside that world, what goes into figuring out how much a luxury handbag should cost?
Mm-hmm. Some of it is cost of goods. So the cost of goods of a Coach bag is considerably less than the cost of goods of an Hermes bag, and considerably more than a Le Sport sac. So there's always that variable. There is also where it sits on the floor, what the competitive market is, what the trends are. Every few years, a brand hits it right and is an it bag, and therefore able to have a lot more pricing power. But I would say in the case of Capri and Tapestry, and most notably Coach and Michael Kors, they have played pretty consistently in that bridge category in terms of their pricing, and that is because that's where they distribute in terms of the mid-tier department stores, and that's where they price it based on how much it costs them to make it.
And do you think that the FTC has a valid argument in thinking that customers will be disadvantaged from a pricing perspective if these two do complete the merger?
Right. So the assumption there is that once the two companies, which are the two largest in that particular segment, once they merge, that they will be in a position to raise prices and therefore harm the consumer economically. Do I think that if the quality of their bags is not radically improved, or the investment that they put in them doesn't change, that will in any way change their ability to control the customer behavior? No, I don't. I think the customers, if they're happy, they'll still come at the right price for the right designs, and if they're not, they're going to go to another player. So I think it's a feeble argument.
If the FTC does prevail here and blocks the deal, what effect does that have on consolidation within luxury, whether we're talking about handbags or clothing or beauty or whatever it may be?
Oh, I think, having been in the acquisition world for many years, I was a partner at the Carlyle Group, and then earlier than that, I had headed M&A at Estee Lauder, which was a very acquisitive time in Lauder's history. Of all the things that I weighed in terms of risk of doing the deal and risk of the deal turning into an accretive one, FTC blocking really didn't enter my consideration. It's not to say we didn't have to go through the protocols and that it was a no-brainer, but I would say relative to all the other risks, it was not a deterrent. I think it will add a very different consideration set going forward, especially among larger players that are, as they have been historically, looking to consolidate.
And Pauline, finally, I wanted to ask you about another handbag-related story that we're watching, although it's not unique to handbags. But we've been seeing this sort of arbitrage business that has sprung up with luxury goods, where folks buy the goods in Europe, for example, handbag made in Europe, at a lower price, and then resell it at a higher price in the U.S., in Asia. And that's been a growing business on the part of these third-party sellers. How is the industry viewing that, and what, if anything, can they do about it?
Well, first of all, the industry doesn't like it for a lot of reasons. The consumer loves it so far as the consumer is protected from the cheaper bags actually being counterfeit bags. And I will say counterfeits have become, especially in the accessory segment, so good that it can be very hard, even for a trained eye, to see what's legitimate and what's not. Of the legitimate products that are being resold for cheaper amounts, I think there's a few issues that have opened the way, or a few shifts that have opened the way for that new market dynamic. And some of it is the industry's own doing. In the last 5 or 6 years, most of the handbag companies in the luxury segment have gone up in price by an average of 55%. And when you take price that radically, you're basically telling the market, you're giving them a great incentive to find arbitrage opportunities. And there's always been a differential between how much a French bag costs in Paris and how much a French bag costs in New York, or even more in terms of even more differentially in Shanghai. That difference, though, right now is making it worthwhile for any middleman to buy and sell and capture the profit in the middle.